Hey everyone, welcome back to Upside Down Data. Today I want to talk a little bit about Bitcoin's fair value, and whether or not it's actually in as much of a deep value zone as so many people are currently claiming. If you like the content, remember to subscribe to the channel, give the video a like and follow us on Twitter. A lot of updates, better indicators, and more over there. So with Bitcoin, I currently have the monthly chart shown up here, and something that I've been seeing a lot on crypto Twitter, for example, and other places, is that anything under 20K is a gift, is what I've been hearing a lot. This idea that anything in this zone here, this kind of support region right around the high from the 2017 run, that anything kind of below that top is just deep value for Bitcoin, and that we're going to see massive appreciation to the upside, and that really that Bitcoin is undervalued at these levels. Now, I want to question that from a slightly different perspective. I want to pull on some macro factors and then use some quantitative analysis to actually see, based on some macro factors, whether or not it actually is reasonable to say that 20K might be this kind of deep value, this kind of way under fair value zone. And the factor I really want to kind of focus in on today is the DXY, or the strength of the dollar relative to a basket of other currencies. So if you're not familiar with the DXY, it basically tracks the strength of the US dollar relative to other currencies, the euro, the yen, etc., the British pound. There's a bunch of different currencies that it's kind of weighed against. And what a lot of people have talked about, you've probably heard about this before if you've been in the crypto space, is that when the DXY is going up, crypto tends to go down. When the DXY is going down, crypto tends to go up. And so this yellow line that I just pulled up here is the DXY, over this same time period as Bitcoin. And so what you can see is that generally speaking, it does seem to be the case, right? You see the DXY kind of going down here. That was coinciding with the kind of main thrust of the bull run in 2017, really moving up while this moved down. But then, and likewise, in 2020, going up into the run into 2021, dollar going down, crypto exploding to the upside. And the opposite is also true. As the dollar starts to go up, like here, that's when we tend to go into these bear markets in crypto, dollar going up, going into this bear market that we've been in right now. And so there does seem to be a connection between the dollar and crypto, and especially more recently, right? The relation between the DXY and Bitcoin's price, for example, is a little bit less clear in its early days. And it's more clear now. And the way I interpret that is that, crypto, Bitcoin is becoming more and more of a macro asset. It's becoming, more institutionalized, or more institutions are trading it. It's becoming more connected with broader macro conditions. And, the DXY tends to also be inversely correlated with risk assets. When the DXY is going up, the stock market tends to go down. When the DXY is going down, the stock market tends to go up. And so because we've seen, crypto start to be more reactive to the stock market as well, we're also seeing it being more reactive to the DXY. And so many different kind of broad macro factors influence the DXY. I won't get into all the different reasons here, but so many of those factors kind of feed into what's going on with the dollar right now that it makes sense that, Bitcoin would be reactive to the same market forces. The Fed tightening financial conditions, some of the energy issues, a lot of the inflation concerns, all of that kind of stuff around the world is contributing to the dollar going on this parabolic rise right now. And so it makes total sense that Bitcoin can't escape that. It's also affected by those broader conditions. So the DXY gives us a nice metric basically to kind of assess what those broader macro conditions are, because generally bearish conditions lead to a strong dollar, bullish kind of risk asset times lead to a weaker dollar. So it's a good proxy for those kinds of conditions. So what I want to do then is go ahead and talk about a quantitative model that I've built that we can use this DXY information to predict Bitcoin's fair value. So I want to start off by just talking about how a lot of other people talk about fair value for Bitcoin, and then talk about how this new approach that I've done here is different from this. So what you've probably seen before, others use this kind of fair value often or all the time, is this kind of time-based fair value. This kind of fair value where you're merely predicting the price of Bitcoin based on this logarithmic function of time, right? So you're basically just predicting Bitcoin's price, or what a lot of people do to build these models, you're predicting the logarithmic price of Bitcoin from logarithmic time. And that's what this is showing you here. So you get this nice curve that kind of fits quite nicely to the Bitcoin overall price. And this is what a lot of people like to look at. And if you looked at this chart, what it'll be telling you is, oh boy, deep value, right? Look how far below the fair value line we are currently for Bitcoin. You know, we're at the same kind of similar deviations that we've been in some of these other past times at bottoms of bear markets. So you might look at this and say, okay, that's it. We're near the bottom, or we're at the bottom because we're kind of extended equally to the downside now as we have been at prior bottoms for Bitcoin. Now, let's talk about a different way we can think about fair value that actually tells us a very different story. So again, this is just looking at time as a prediction. So it just says that Bitcoin's going up at some rate. We can quantify that with this model. And if we project that into the future, you know, we think that Bitcoin's below trend, that it should, you know, eventually catch back up to this trend. What happens when we introduce the DXY to this equation, right? What happens when we start accounting for the DXY in these types of models? That's what I'm showing you here. So what this is it's the taking that time-based model, but we're adding some additions to it. We're adding a DXY factor that's taking into account the current level of the DXY and its relation to Bitcoin's price over time. And what I've also added here is a factor that also accounts for the fact that the relation, the correlation, the effect of the DXY on Bitcoin's price has changed over time. And we saw that when we looked at, you know, the price. You know, early on in Bitcoin's history, it wasn't really super correlated with the DXY. But then as we got further in time, it became more and more correlated with the DXY. We just saw that on the chart we were just looking at. So I've also included a factor in the model that accounts for that change as well, saying that, you know, Bitcoin's relation with the DXY is becoming more pronounced over time. We saw that descriptively. Turns out quantitatively, it's also true. Now let's see what's going on here. Let's look at what's going on. What you can see now is we're getting a very different story being told over here where we are now than the time-based model was saying. You know, this is saying that we're way below fair value if we look at this model. Here, it's actually saying we're above fair value. We're actually overvalued when we take into account the DXY. And again, what this version of what this model is doing, what this fair value model is doing, is it's not just using time to predict what Bitcoin's price should be. It's also predicting Bitcoin's price from what the DXY is. And, you know, it knows historically how Bitcoin has related to the DXY and how that relation has been changing over time. So it's saying that right now, based on what it's seeing, we should actually be lower. That with the dollar rallying parabolically to the upside, it's actually surprising that Bitcoin's at the level it's at right now. It actually thinks that Bitcoin should be at a lower price level currently. So I'm going to talk a little bit more about what that fair value number is in a minute, but I just want to talk about a couple other things first before we get there. So what you might be saying when you look at this model is like, okay, great, but is this just an overfit model, right? So with this one, I fit it to all of Bitcoin's price. So there's, you know, everything about everything is known to the model that it's predicting here. So, you know, today's values of the DXY and Bitcoin's price and everything before is built into this model. So you could say, okay, is it overfit, right? Could it actually have predicted this from some time in the past? Because oftentimes what you can do is you can build a model that will look really great when it has all the data and it's not predicting anything in the future, just predicting, you know, the values that have already gone in to help fit the model. But then those models can just completely fall apart when you try to predict future values. So I went ahead and gave a test for that. So what I did is I actually fit the model to just June 1st of 2020 and see how it would actually have acted over this time. So basically the model is fit to only this data, only knows this data. And then from here on out, it's just, you know, giving a predicted Bitcoin's price based on the DXY value and time with no knowledge of what Bitcoin's price actually is during that time. And you can see as it still does quite well, right? And actually where it ends up, you know, between here and here is basically the same as the model that knows everything. So it doesn't seem to be an especially overfit model. In fact, it seems to be pretty good. If you had fit the model right here and just let it run, it would have generated these values that would have gotten you to the exact same point where we are right now. So that's just something I wanted to say, that the model seems robust and not just extremely overfit. So if that's the case, then let's talk a little bit more then about where it puts us right now. So I'm going to go back to the full model, you know, with knowledge of everything, just so that we have one that's kind of fit the most to the present day that we have. But again, it seems like a reasonable thing to do because, again, we're not seeing an extreme amount of overfitting based on that examination. So let's talk a little bit about where then it actually sees Bitcoin's price being right now, what its fair value is. So I'm going to show you this table and we're going to look at a few things here. So the first thing I'm showing you just is, you know, at the current DXY level and at, you know, the current date, what does it think Bitcoin's fair value should be? And it thinks that Bitcoin's fair value right now, based on what the DXY is doing, based on where the DXY is actually just below 13K, which is interesting. That's a point that a lot of people have been speculating as being the next place for Bitcoin to go, more from a technical perspective, right? This is right around where Bitcoin topped out in 2019 during that kind of mid-cycle rally that it had. And there's also some points where this level acted as resistance in Bitcoin's past as well. So it's a level that people have been watching. Interesting to see some confluence here that based on what the DXY has been doing, this model thinks that that's basically the level it would be targeting for Bitcoin. But what's also really nice about these types of models is that we can do more with them than just look at what the current fair value is. We can test hypotheses, test scenarios, and see where the Bitcoin fair value should be based on those scenarios. So what we're going to do is we're going to look at some hypotheticals. So let's say that 30 days from now, the DXY rallied another 3%. Why 3%? Well, that's because that's what it did in the last month. So, up until today, as I'm recording this on the 7th of October, it had rallied 3% since, a month ago. So that's why I'm using that. And so 30 days ago, it was 3% lower. So let's imagine it does the exact same thing again. In the next 30 days, it rallies by 3%. Where would that put the Bitcoin fair value? That put it all the way down at 10.4K, more or less. So a pretty noticeable drop there. Let's get even more bearish. Let's say that the DXY rallies 6% in the next 60 days. So across the 3 months, it has 2 rallies of 3% on average across those 2 months. We were dropping all the way to $8,000 fair value for Bitcoin. And then if we had kind of what might be the more kind of near-term worst-case scenario where we actually go and retest the kind of previous high back from the early 2000s for the DXY, which would be a move up about 7.23% from current levels, then the fair value for Bitcoin would be all the way down at 7.5K more or less. So we're already seeing currently that just because fair value based on this model is low, it doesn't mean that Bitcoin's price has to fall to it, immediately, right? We're currently trading up at 19K, fair value is down closer to 13K. So it is possible for Bitcoin to hold its ground against where the fair value is. But if the idea of fair value and of these fair values models is that generally speaking, the price will kind of gravitate towards that fair value with time, what this would mean is that this would put pretty extreme downward pressure on Bitcoin. If we saw a 7.23% rally of Bitcoin, I arbitrarily said, let's say, it got there in 80 days. Well, let's say in something along these ballparks would happen, even if Bitcoin didn't fall down to this level, this would still be quite a lot of downward pressure that would be expected. There'd be a lot of downward pressure expected for Bitcoin based on what we know of how it's related to the DXY in the past. And so it might not fall all the way down here, but it certainly should fall. And I at least would certainly expect it to lose its June lows currently at 17.5K. I think dropping down to a lower level, the very least would happen if we saw this kind of more extreme, shorter term move up on the DXY up to those prior highs from early 2000s. So those are the bearish scenarios, right? Quite low, really bringing us down into those earlier levels. Really not anything I think anyone's hoping for, but something we have to be aware of. This is what the DXY does. The DXY, as it rallies, it destroys risk assets. That's what it does. Historically speaking, it'll wreck the stock market, and historically speaking, it'll wreck crypto too. So we have to be aware of this. Let's also look at the other side, right? The more hopeful side. What happens if we start seeing the DXY actually falling off? Let's say it actually finds a top, starts moving down. Let's look at some scenarios. So if it falls by 3%, we'd actually see the fair value go up to 18.8K. So not even where it's at currently, right? It would still actually say that Bitcoin's current value, if it held that, if in 30 days Bitcoin is still trading at 19.5-ish K like it is right now, it would still be overvalued from this model's perspective. And then if we had the DXY drop by 6% from current levels down to about 106 in the next 2 months, then we'd be actually right around fair value where we are currently. And then if we had a more extreme drop on the dollar, back down to kind of a prior kind of range that had been in that acted as resistance in the past and support in the past, down a little bit under 100, then you'd actually see crypto be expected to blow up. And so if that happened in 130 days, the reason I chose that, it was 130 days ago that we're at this level. So let's just imagine we fell back down as quickly as we went up. You'd actually then see Bitcoin fair value go all the way up to 53K. So this would be an extreme bullish scenario, certainly not my base case, But this is what the model will expect to happen should we fall to that level in this type of time frame. So really what I'm doing with this exercise, and what I really want to kind of leave us with here, is that, you know, in the past, people have talked, or currently, a lot of people are talking about Bitcoin as being this kind of extreme value right now, deep value. And there's certainly a lot of on-chain indicators that people can look at, and also different technical indicators people might look at that would suggest the same thing. But don't for a second think that that means that Bitcoin can't fall off a cliff further from here. These type of models suggest that further downside is very plausible, especially if we see the DXY continue to rally to the upside. So it's something that we have to keep in mind going forward. And so, you know, a lot of this is dependent on what the DXY does, but if we don't see any change in that trend, watch out, because this model, which again, it knows how Bitcoin tends to relate to the DXY in the past, and it also knows how that interacts with how Bitcoin has tended to move with time, and how the value, or excuse me, the correlation between the DXY and Bitcoin's price changes over time. All of that's being incorporated in this model. And so this is what it would expect in these types of scenarios. So the most bullish thing that could happen right now for Bitcoin in some ways would be the DXY rolling over. That would be extremely helpful and would take a lot of pressure off of Bitcoin. If you don't see that, it's going to be dangerous times ahead. So that's really what I wanted to talk about, that, you know, with this idea of fair value, it really depends how you're defining it. If you're merely looking at time, you know, that can lead to one conclusion. But if we look at a factor like the DXY and how we know this is important, and we know macro factors that are important to the price of Bitcoin, it paints a very different picture, one that I think is a lot more cautious. So not financial advice, of course. You should make of these data as you will, make your own decisions. But that is just something I wanted to share because it gives a different perspective I think a lot of people in the industry are currently giving. All right, if you like the content, remember to subscribe to the channel, give the video a like and follow us on Twitter. A lot of updates, Twitter indicators, and more over there.